Good evening, Miss Ari. In today's occasion, we will be presenting our financial statement analysis assignment. But before that, let me introduce ourselves. My name is Ghazi Ahmad Khairi, and there is also Ruben David Augusto Tambunan, and also Harith Zaki Mutaki. Before we get into the written report, let me tell you about the company that we've decided to do a financial statement analysis on, which is Alfamart, or also known as AMRT, or PT Sumber Alvaria Trijaya Tbk. Here are the contents itself, and then for inside here we have a company profile. So let me just summarize a bit on this company profile because it's quite long. Um, PT Sumber Alvaria Trijaya Tbk, or AMRT, is the operator of the Alfamart mini market chain and is one of Indonesia's largest retailers, established in 1989 and listed on the IDX in 2009. AMRT now manages over 22,000 stores nationwide, supported by nearly 100,000 employees and a strong logistics network of warehouses and distribution centers. Its core business is daily consumer goods, but it has expanded into cosmetics, pharmacy, and digital services like Alpha Gift, and so on and so forth. Financially, AMRT booked around 118.2 trillion Indonesian rupiah revenue in 2024 and growing over 10% from the previous year, although net profit slightly declined to around 3.15 trillion Indonesian rupiah due to cost pressures. The company maintains low debt and continues to invest in new stores, especially outside Java, while strengthening supply chains and digital channels. With strong brand recognition and scale advantages, AMRT remains a key player in modern retail, though it faces challenges from thin margins, rising costs, and intense competition with Indomart and online platforms.
Hey, my name is Harisaki Mutaki, and I'm here to explain about the company financial data of AMRTs. So there are four financial statements conducted here. The first one is statement of financial position. The second one is income statement. The third one is cash flow statement, and the fourth or the last one is statement of change in equity. Okay, starting from statement of financial position, based on statement above, per December 31, 2024 and 2023, it was reported that in millions of rupiah, in 2024, AMRT's total assets increased to uh, 38.7 from 34.2 in 2023. It was also supported by higher inventories and receivables. Liabilities also rose to IDR 21.2, and the total equity strengthened to IDR 17.7, driven by retained earnings. Okay, that's the information we got from the statement of financial position. Now we move to income statement. The revenue grew from IDR 106 to 118 to in 2024, and the gross profit rose to 25.4 million, and the net income declined slightly from IDR 3.4 to 3.2. Okay, now we move to cash flow statement. So in terms of cash flow, the operating cash flow improved significantly to IDR 8.1 compared to 2023. It had 6.8. The investment cash outflows also increased showing continuous expansion while cash and cash equivalents closed at 770, big jump from 2023, right? The amount is 255 in the 2023. And the last one is in the statement of change in equity. There are total retained earnings. Yeah, it's also increased to 13.1 from 11.1 in 2023, and the total equity also increased from 15.7 in 2023 to 17.7, which highlights stronger capital and financial stability.
So, next, I will represent and tell about ratio analysis. Ratio analysis is a method assessing companies' financial performance by examining the relationship between various numbers in financial statement. So the first is liquidity ratio. We can see at the liquidity ratio, we find a current ratio and quick asset test ratio. So current ratio, the formula is current asset divided by current liabilities. So we can calculate in 2024, we found is 1.0447, and in 2023 it's 1.0036. So, and that under is quick exit test ratio minus current asset minus inventory divided current liabilities. So we find at 2024 is 0.44, and 2023 we find 0.41. So the conclusion is in 2024, the company's current ratio slightly increased to 1.04 from 1 in 2023, showing a small improvement in its ability to cover short-term liabilities. However, the quick asset test ratio remained almost the same, 0.44 in 2024 versus 0.1 in 2023, indicating that after excluding inventory, the company's immediate liquidity is still relatively low and stable. The B, activity ratio. The first point, we find inventory turnover. COGS divided average inventory. We find the average inventory first. We find is 10,924 423 millions. So we find at 2024 the result is 8.50x, and the 2023 we found the result is 831x. The second point is receivable turnover, or the formula is sales divided average account receivable. We find the average, so we find the average account receivable first. So we find it's 2,785,97. So at the 2024, we found it's 42.46x, and 2023 is 41.59x. At the point 3 is total asset turnover, or sales divided total assets. In 2024, we found the result is 3.005x, and 2023 is 3.12x. In 2024, MRT maintained efficient operation with an inventory turnover of 8.5x, slightly higher than 8.3 in 2023, showing strong product movement. Receivable turnover remained very high at 42x, reflecting fast collection of sales, while the total asset turnover stayed above 3x, indicating highly effective use of assets to generate revenue despite a small dip from the previous year. Overall, MRT this demonstrates strong activity efficiency. C. Debt ratio. Debt ratio measure how much a company assets are financed through liability, showing in reliance and creditor of finance risk. The first point is debt ratio. The formula is total liabilities divided total assets. In 2024, we found the result is 0.5439. And 2023, we find the result is 0.5417. And the debt to equity ratio have a formula is total liabilities divided total equity. 2024, the result is 1.1926 and 2023 is 1.1803. And the last is profitability ratios. So the profitability ratios look at how good company is making profit from its sales, assets, or money invested by owner. They show how well the business is going overall. The first one is gross profit margins. So the formula is revenue minus COGS divided revenue. So it's become gross profit divided revenue times 100. We find at 2024, the result is 21.4% and 2023 is 21.5%. The point 2 is operating profit margin. The formula is operating profit divided revenue, all sales. 2024 we find is 0.03% and 2023 is 0.04%. The third point is earning per share. Net income divided number of shares outstanding. The 2024 we find is 1.1 0.000078 rupiah. And 2023 we found 0.000084 rupiah. So the conclusion is in 2024 profitability slightly away compared to 23, the gross profit margin declined marginally from 21.5% in 2023 to 21.4 in 2024. The operating profit margin also fell from 0.04% to 0.03%, showing lower efficiency in generating profit from operation. Similarly, earning per share or EPS decreased from 0.000084 rupiah in 2023 to 0.000078 rupiah in 2024, indicating reduced return for shareholder.
Okay, on to the stock fundamental analysis. So for starters, the stock fundamental analysis is used to evaluate a company's real value through its financials, business, and industry to see if a stock is undervalued or overvalued. From the ROA itself, or the return on assets, from 2023 to 2024, it has gone down around 0.6%. And for its ROE, or return on equity, from 2023 to 2024, it has actually gone down as well, for around 4%. Next, for our analysis, we also included our PE band, which is basically price to earnings standard deviation band, and it's a financial indicator used by investors to assess if a stock's current price is undervalued, fairly valued, or overvalued based on its historical price to earnings ratio. And here we took a screenshot from the application called StockBit for looking at the PE band itself. And as of 19 September 2025, AMRT's current PE ratio is 25.65, which sits near the -2 standard deviation level, or 25.5, and is well above the historical mean of 36.44. What this means is that the stock is trading at a relatively undervalued level compared to its 3-year average after a steady decline from higher valuations in 2023. We've also included the PBV band, which is not really too different from PE band. And as of 19 September 2025, AMRT's current PE ratio is 25.65, which sits near the -2 standard deviation level, 25.5, and is also well below the historical mean of 36.44. So again, this suggests that the stock is trading at a relatively undervalued level compared to its 3-year average after a steady decline from higher valuations in 2023. And lastly, we have the summary for our analysis itself. And again, if I read this all, it will be too much, so I've summarized it again. Basically, in 2024, AMRT grew its revenue to around 118.2 trillion Indonesian rupiah, but net profit eased to 3.2 trillion Indonesian rupiah due to cost pressures. Assets expanded to 38.8 trillion Indonesian rupiah, and equity rose to 17.7 trillion Indonesian rupiah, supported by retained earnings. Liquidity stayed stable, operations remain efficient, and through margins narrowed slightly, with a PE of 25.65 below its historical average. The stock appears relatively undervalued. The reference we used is from the report list that we got from Alphamart, so it's right here. And we also used StockBit, the application StockBit, for screenshot of the PE band and the PBV band. Okay, that's it from us. Thank you very much. I'm sorry if we've said anything wrong for this presentation. Wassalamualaikum warahmatullahi wabarakatuh.